Okay, hello everybody, and welcome to Sidoti's May Micro Cap Conference. My name is Brendan McCarthy. I'm an analyst here with Sidoti, and I'm very pleased to welcome Huize Holdings. And joining us from the company will be CFO and Head of International, Mr. Ron Tam. And before I hand it over, a quick reminder that the Q&A tab is located at the bottom of your screen. Feel free to type in any questions throughout the presentation, and we can save time for Q&A at the end. But with that said, I'll pass it over to Ron.
Great. Thank you so much, Brandon, and good morning, everyone in the US. It's Ron here from Huize. Very pleased to be back on this conference. It's our second time joining, and hopefully today I'll be speaking to some old friends here who's joining us again, and more importantly, to introduce our equity story to new friends who are keen to know more about our business. And by way of background, we have been listed on the NASDAQ global market for 6 years now. We've been listed since 2020, and it has been a roller coaster ride over the past few years with all the geopolitical situation between the US and China, and obviously regulatory changes in domestic market. But I think today we have something very exciting to share with the audience, given how much we have traveled through this journey and to be where we are right now. So a very quick word on myself, just for those who have not met me before. I'm Ron, and I'm previously investment banking professional with Goldman Sachs. In my initial career, I've been involved with the Chinese fintech sector for the past 13 years, and Huize is my latest, CFO appointment since 2020. I've been involved with the company for 6 years, and my title also includes Head of International, which means that I'm also driving the international business development for the group since 2023. And the rest of the team members are listed here for your information. We have combining, over 100 years of experience from both domestic Chinese leading institutions, and also international financial institutions as well. A one-liner on what we are, who we are. We are Asia's leading insurance technology platform. We integrate consumers, carriers, and distribution partners through a fully digital AI-driven ecosystem to deliver seamless lifelong insurance experiences. And I will further, elaborate on what that means in the later slides. In terms of our business model, essentially we're a three-sided marketplace involving three key constituents here. We are not just simply an insurance broker in a simple sense. We are more of a platform, and that distinction matters enormously for valuation purposes. We connect three parties simultaneously. So obviously, one of the most important parties is the insurance carriers that we help distribute insurance to the marketplace. In the current moment, we have over 150 live insurance partners that's connected through API to our platform. And these are the insurance companies that need digital distribution without the need of building it themselves. So we're basically solving that digital distribution problem for them. In the middle, you can see that we have a ton of ecosystem partners. These are partners that provide us with leads for insurance monetization. So these are commonly the e-commerce merchants that, e-commerce platforms in China. We have a very vibrant community of influencers or KOLs that are able to bring in leads for us. And also, more importantly, and increasingly importantly in the marketplace, independent financial advisors or IFAs who need a compliant and technology-enabled insurance monetization platform to do business. And thirdly, the end market, the end consumers. To date, we have accumulated over 12 million consumers who want simple, personalized, digital-first insurance experiences. And these are the three key constituents that we serve on the marketplace. So a very quick sharing on the scale of our platform. Here are some key metrics here to show. Again, we have over 12 million consumers who have bought a policy from our platform. So that's a pretty sizable, consumer or customer base that we have. That obviously lead to a lot of interesting, AI deployment that we could do with the transaction data that we have accumulated over the years. In the middle, you can see that we have recorded a significant premium distribution scale. So in the year of 2025 alone, which is last fiscal year, we have distributed over $1 billion of policies. That ranks us in the top, five distributors in the China market. Again, we have an extensive partnership network. We have over 150 insurance carriers that's connected to our platform and 10,000 distributors, who is working with us in the ecosystem. Currently, AI is the topic of the day. In the later slide, we will show you more about how we're doing AI in terms of deploying that in our business model and the concrete, results that it's showing through. It's very exciting to share some details there. And also internationally, we are growing significantly. Since 2023, I also wear the hat of the CEO for Poni Insurtech, which is our, overseas brand. And we're proud to say that we have set a target in 2024 for 30% of our group revenues coming from the international market. And we have already reached almost the 50% mark for the fiscal year of 2025. We have also secured licenses in Singapore. So in the later slide, I'm also going to more on the international perspectives. So we operate across three key channels for distribution. Here you can see some visualization of what that means. On the first part is the direct-to-consumer concept through our own digital and social presence on the internet, on digital channels. So for the US users, this will be your TikTok of the world. This will be your Instagram, your Facebook. In China, this will be the equivalent platforms like Rednote, which is now very familiar in the US marketplace as well, which is the Instagram equivalent. So essentially, we reach consumers through content-driven marketing efforts to reach the eyeballs, to do consumer education, to raise awareness for insurance. In the middle, we work with, again, 10,000 ecosystem partners. This could be influencers, this could be merchants, this could be financial institutions or agencies who do not have the insurance license or products, which require our platform to help monetize. On the right-hand side, we are also a very major platform for independent financial advisors in China and increasingly in Southeast Asia. We basically are an open architecture whereby our product and services platform can be opened up to third-party IFAs to utilize, and therefore this will be a turnkey solution for digital insurance product distribution for the IFA network. So going to the next slide, a word about our customer base. In financial services, customer quality determines unit economics, and we would like to say that ours are relatively high quality. Our 12 million strong policyholders have an average age of 35 years old. These people are at the prime earning age and insurance purchasing years. 65% are from higher tier cities of China, so that means the top 20 GDP cities of China. These are the mass affluent segment with both the need and ability to purchase multiple policies for themselves and for the family. If you are familiar with the insurance industry, you would note that we have a very high persistency ratio of over 95%, which means that customers who buy the long-term policies keep paying the premiums. And that means a lot for the insurance companies that we partner with. The LTV playbook is also very clear and executing strongly. First policy buyers primarily in critical illness and life insurance. And second policy repurchase rate is at the tune of 36% in the most recent year. We cross-sell into health, children, seniors, comprehensive family, education, annuity, and the likes. So the cross-selling and upselling LTV equation is already pretty much proved itself, given our high quality customer base, young, dynamic, and in the mass affluent years of earnings. So on the AI moats that we have, I think when we talk about AI these days, we need to back it up with some concrete numbers, not just concept. And I think that over the last 3 years, we have been investing quite heavily in building up our AI, capabilities. We're spending, close to $10 million per year just on CapEx. And I think we are happy to say that we are now practicing what we preach for the past few years, and really thanks to the digital first, platform operations that we have from day one. We have accumulated a massive treasure trove of proprietary data from our platform operations, over the last 19 years. And now that is translating into AI empowered, mobile app, which is driving a 50% year-over-year growth on self-directed long-term policy purchases. There's also, 15,000 users being served daily through our AI-enabled advisory. So without any human interaction, the AI is, empowering consumers to choose the right products for themselves. On a customer service end, we are achieving a 95% accuracy ratio on responses to inquiries. And we're also using AI to facilitate claims, which is the most important pain point to solve for the customer at large. And our customer feedback has been telling me that the AI and empowered claims assistance is extremely valuable to our customers. So with a quick word on the market opportunity, I think the US audience may not appreciate actually in China, although we are now number two economy in the world, we are still very under penetrated in terms of insurance. In the US, we talk about $3,024 of coverage per capita. In China, that's 388 only. That's a factor of 8 difference between the US and China, which is representing the single largest protection shortfall in financial services in the world on top of 1.4 billion people and a rapidly expanding middle class. So that gap is really our market opportunity, and we are the infrastructure layer to close it. 20 years ago, traditional insurance in China is sold through agency. Traditional agency is very expensive. That has changed rapidly in the recent years, with rapid adoption of digital insurance distribution. On the left-hand side, you can see that the digital penetration is expected to reach 35.7% by 2028, representing a 2 trillion RMB market. The key buyers nowadays are the post-90s millennials, and the trend in digital adoption is just going to accelerate further and further. And on the right-hand side, that's also a very interesting fact to note that the channel mix in China is still predominantly through tied agents, but that's changing in recent years. And if we take note of what Hong Kong is experiencing or the US, we talk about at least 35 to 50% of distribution being handled by independent agents and brokers. So we are seeing that both the pie of the industry and also the share of the pie will be increasing over the next 5 to 10 years, which will strongly support and underpin a double-digit CAGR in new business premiums by digital platforms like ourselves. So now we're getting to the international expansion. Again, very proud to be heading this effort for the group. The international business is no longer a pilot; it's a second engine of growth operating at scale. And again, the brand name is called Poni Insurtech. Just for the benefit of Western speakers, we do not use a Chinese name. And Poni is established in 2024. We're headquartered in Singapore, obviously for geopolitical diversification and center for international operations. So we're operating a dual hub approach. Again, we targeted 30% international revenue 2 years ago, and we're almost breaking 50% last year. So we are executing. We are checking our progress, and I think we're delivering. Particularly in Hong Kong, revenue growth has grown almost 3x in 2025, contributing 48% of total revenue overseas. So that's quite remarkable and significant given that we only started our Hong Kong business in 2023. That's really underpinned by the tailwinds from the mass affluent cross-border wealth allocation from the mainland Chinese market. And we are building the digital infrastructure to facilitate that. Excitingly, in the last year, we also secured a Singapore license to conduct our insurance business. We are building a dedicated high net worth proposition serving cross-border wealth management in Singapore, protection, accumulation, and legacy planning. So Singapore is our platform for pan-Asian institutional grade distribution. And in Vietnam, very exciting, a growth market through our Poni brand and our acquisition of Global Care. In the market, which is a leading insurtech play in the market, we have delivered over 100% growth in gross written premiums, 84% revenue growth in 2025. We have quadrupled our users in 2025 for our local mobile apps. So very exciting developments in Vietnam, although it's still at a relatively small base in the absolute scale. But that would change. That's a long-term play for us. And again, we are replicating a proven playbook from China into markets that are, 5 to 10 years behind China on digitalization. So it's very exciting growth, trajectory expected towards 2030. We're looking at a CAGR of almost 30% for the market. Financially, we also delivering on four key metrics here. I'm not gonna just read off the slide. I guess the audience can read on your own. I guess the most important thing is premium growth has been very strong, especially in first year premiums. That's reflecting new business momentum. This is a key growth driver. Revenue has grown also significantly in 2025, particularly the international revenue contribution. I think that is very important for our US investor base to de-risk our geographical concentration in just a pure play China play into a pan-Asian play. Profitability also has been, we have been robustly delivering to the shareholders. 22.6 million RMB for the last fiscal year, significantly improving expense to revenue ratio of 6%, and with AI and all the efficiencies that's driving that. And we are expecting margin improvements going ahead because of AI deployment, in the works. So just to wrap up on the investor highlights, there are 8 key points here. To crystallize into, takeaways. We are a leading insurtech platform that connects the full industry chain from carriers to partners to consumers. We already deployed AI, and that's driving efficiency with proprietary data set that we have gained over 19 years of operating history. We have a very sizable policyholder or customer base, 12 million strong. These are young, mass affluent, high LTV potential. We have been customizing products with leading international providers that speaks to the quality of our business model and sustainability of our business model. We have high, customer, service, points or satisfaction rates. We have a very expansive market opportunity just in China alone, and also rapidly digitizing pan-Asian markets. Sustainable profitability. We have a very cash-rich balance sheet, which I'm going to go into the details on the next slide. Compared to our market cap of only less than $20 million right now, we have over $35 million of cash on the balance sheet. The valuation dislocation is extremely, I would say, attractive to new investors at this point. Again, we are a profitable business. We're not burning cash, and at a price to book metric, we are just 0.3 times price to book. So again, that's a huge valuation disconnect between the market value and also the fundamentals of the business. For management and insiders, we own around 34% of the company, so we have significant interest in the business. I guess we are actively engaging with the US market, given how I think it's also very timely that the Trump C visit was from last week, and then we do see that the country relationships warming up. That should do good for Chinese companies that are listed on the NASDAQ market with good fundamentals. So, key takeaways on the valuation side and on the investment opportunity. I think there will be a catalyst for re-rating to peer multiples. I think, at least at a one-time book, we are seeing 3x, valuation uplifts from current levels. And the international business is scaling well. We are delivering on the international expansion. So with that, international revenue diversification should also help re-rate our company from a pure China sort of discount to a pan-Asian premium. So with that, I'm just going to close our presentation, and I'm very happy to take any questions from the audience. Thank you so much.
Great. Thank you, Rob, for the overview. We can now open the floor for Q&A here. We have a couple questions from our attendees. Can you discuss your insurance partners, and are these relationships primarily distribution, or are there product co-creation involved there?
Great question. Thank you. Yes, we have a very sizable business partnership with leading insurers in both China and increasingly in the international market for co-created products. I think some of the insurance companies that are operating in China, particularly the foreign Sino joint ventures, so these will be the likes of the Aviva or the Generalis of the world. These players, They value a lot on our insights on the marketplace because we are the frontline distribution that's facing the consumers every day with our consultants, with our agents and advisors. So we are able to feedback very precious, market data, market intel, consumer preferences to help the insurance companies to design products that suits the marketplace. So in that way, we are increasingly getting engaged with the insurance carriers to co-develop products that with a very high confidence level that it will be well received by the digital platforms. So that's a very important point to note as well. So on this slide, you can also see some numbers that will back the statements. Um, 88% of our portion of that is coming from our customized products from these co-developed products with the insurers.
That's great. And Ron, I believe you mentioned, typical persistency ratios in the mid to high 90% range. It's obviously very strong. Has that ratio always trended around that level? And how does that compare to some of your peers?
Right. So yeah, I think our persistency metrics have been very, very stable for the past 6 years of our disclosure history. We have been disclosing this metric pretty much every quarter. And you can see that, it has been at least at the 90s level. So in the industry at large, I think we are top quartile for sure. And the reason for that is really by way of our distribution franchise, we are able to reach the younger cohorts in the market. And with these younger cohorts buying long-term policies, and these are mass affluent white-collar workers in the top 20 GDP cities of the country. So all these factors play into the high persistency ratios. So the core of business is robust, and that's also the reason why leading insurers decide to work with us on customized products offerings to the marketplace. We just disclosed our Q1 result, actually, operating metrics this morning before market open. So again, in the first quarter of 2026, our persistency ratios are at least 97%. So pretty much at par to what we had last year.
That's great. And in those Q1 results, I think I noticed the first year premiums, had very strong growth. But it looked like
Yeah.
the renewal premium growth was lagging that first year growth a little bit. Can you kind of bridge that a little bit between what you mentioned on the persistency side and what you're seeing on the renewal premium growth side?
Sure. So the premium numbers, I think the audience needs to understand. Some products they have a very long-term life cycle. So for example, some of the critical illness products they go for 10 years of payment, right? But for most of the savings products that we are distributing in the recent 2 3 years, be it in the China market or the Hong Kong market, these are typically single premium policies. A large portion of that will be single premium policies. So therefore, they just pay for the first year. And the renewal, there's no renewal premium on those, right? So because it's single premium. So therefore, you need to look at the persistency metrics to be more relevant as to the quality of the business. So the renewal premium number will be affected by the product mix in the most recent years. And the key growth driver for revenue actually is FYP or first year premiums because we get the bulk of the commissions in the first year. So FYP carries a much higher commission take rate than renewal premiums. So again, in the Q1 of 2026, we just published the numbers there. We have a 52% year-on-year growth on first year premium. So it's a very, very strong number. And we do see signs of, the economy picking up again in China. And also, again, thanks to the tailwind of wealth, allocation to the offshore markets from the mainland Chinese. Hong Kong is seeing still very strong momentum. And now we're also in Singapore with a Singapore franchise. We are able to capture some of the more high net worth customers that will be moving the capital to Singapore. And then, yeah, so in Vietnam, that's also a very high growth, albeit from a low base.
Got it. That makes a lot of sense. And let's turn to the international side of the business.
Yeah.
I think you mentioned international revenue was currently trending above your 30% target of total revenue. What's
Yes.
the outlook for that kind of revenue mix going forward?
Yes. So we have actually reached 48% in 2025 on this slide. We see that this number would be stabilizing a little bit at this level because there has been a relatively high growth in the last 1 to 2 years for the Hong Kong market versus a somewhat lukewarm market environment in China, as we all know, given the macro challenges there. But again, because macro China or macro picture in China is warming up, we do believe that China market is expected to see some good growth this year. And while Hong Kong continues to grow with a strong momentum, and additionally with Singapore and Vietnam, we see international revenue to be relatively at this level because of those strong growth prospects from both domestic and international markets this year.
Got it. And maybe talk about the margin profile of the international business, the commission margin, maybe versus or in the mainland China versus some of the international areas where you're doing business.
Yep. So the international segment is indeed carries a relatively lower margin versus the China market business. That has to do with the way that we distribute with partnerships. Mostly, this will be the IFA partners that will be selling these offshore products in the ecosystem. Of course, we also have our organic customer base from our platform that will be purchasing these offshore products. But the blended margin on the international segment is relatively lower than the Chinese segment. Margin-wise, we do expect a relatively stable margin profile on the gross level. But on the operating and net levels, we do see potential for operating leverage to manifest itself, given how we are deploying AI in the business, increasingly. That would mean either cost savings if should we choose to pursue, right? I.e., headcount reduction, or with the same amount of headcount, we can produce 5x, 10x more business. So either way, we will be achieving operating leverage. So we do see margin profile at the net basis to be improving in the next 3 to 5 years, given how we are already heavily invested and seeing results from the AI deployments.
That's great. And on the CapEx side, I think you mentioned the bulk of CapEx has been deployed towards AI development. Can you go into a little bit more detail on any success that you're seeing on the development side and maybe how you see that figure trending through the remainder of the year?
Yeah, so on this slide, we have quite a lot of details on the AI, capabilities and results. So I guess we are running a little bit out of time. I think this deck will be uploaded on our website, so the audience can feel free to go and search for it. In a nutshell, three key things. We increasingly using AI to automate customer acquisition. So that in itself is very, very powerful, right? Acquiring customers just using AI, and AI chatbots being the main interface between our mobile app and all the social platform presence with the customers, right? So that's number one. Again, that's on the revenue generating side. On the OpEx saving side, you have the claims being processed by AI, so we do not need people to process that, or as many people to process that. And on the underwriting efficiency, that's also something that we can empower the insurance companies. But I didn't get into details there on this call because of the limited time. But then, risk management on behalf of on insurance companies delivered through our AI-empowered underwriting engine has been very powerful as well. And that would mean significant operating cost savings, and that will be passing through the ecosystem. And therefore, that would also translate into margin improvement on the operating level. So all in all, AI is deployed front, back and center throughout the value chain, and we're just at the beginning of it.
That's great. Well, Ron, we really appreciate the detail. I have about a minute left here. I will pass it back over to you for any closing remarks.
Well, thanks, Brandon, and I appreciate the audience for joining today, and I'm very excited to to engage with the US investors, after a very challenging few years, and we'll continue to reach out to the market. And we do see a very strong re-rating catalyst coming in the next 12 months for the stock. We also want to close by saying that we do have plans for a dividend payment distribution, provided we meet certain profit targets this year. So we would be able to also return capital to shareholders directly through a cash dividend. So that's in the works, and we do hope to achieve the targets that we set for ourselves.
Fantastic. Thank you, Ron. Thanks everybody for joining us.
Thank you.
Take care.